5 of the big tech companies combined with a combined $10 trillion of market value set to report in the coming days. Name some names here: Microsoft and Alphabet. They kick off earnings on Tuesday. Then we're followed by Meta and Amazon and Apple on Thursday. Joining us now to help break it all down is Mandeep Singh of Bloomberg Intelligence. And Mandeep, we're talking about 5 of the magnificent 7. You think about what we heard from Tesla last week. Wasn't so magnificent, I think it's fair to say. How are you expecting these 5 to go over?
I mean, look, when it comes to top line, there is a clear divergence. You're seeing the likes of Meta and Microsoft growing or expected to grow at mid to high teens. And Apple, on the other hand, is expected to have, flat revenue growth. So clearly there is that divergence. But to me, the key aspect here is the CapEx spend and the guide. So last quarter, what we saw was Microsoft raising their CapEx guide for 2024. Everyone else was kind of on the quieter side, and they didn't really give out much. And that, to me, sets expectations in terms of what these companies are thinking around the AI monetization. I mean, look, at the end of the day, it has to translate into revenue. Microsoft has been the only one who has quantified their AI revenue so far with Copilots and Azure workloads. Other ones are yet to do that, and we know Amazon is the largest cloud player, so it'll be interesting to see what they say around the cloud growth.
Absolutely. Keep an eye on cloud, on CapEx as well. But let's pick on Apple a little bit here, because it feels like a unique toxic brew for Apple this quarter. When you think about antitrust issues, you also think about China and the fact that it's been downgraded a couple of times at this point on the basis of weak China demand. How are you thinking about Apple this week?
I mean, look, this is the holiday quarter, and we know Apple tends to do well in their holiday quarter when it comes to the top line growth. So I know the expectations are quite low now, given, the downgrades and all the negative news, and China is a weak spot when it comes to, thinking about 2024 and beyond. But to me, it's all about expectations. And right now, I feel Apple has the bogey that it can deliver on in terms of meeting those or slightly exceeding those expectations. For other ones, the bar is already high. And so I wouldn't be surprised if Apple comes out with better than expected numbers.
And just quickly, before we let you go, let's talk about one of the big headlines this morning, and that is Amazon dropping its $1.4 billion deal to buy iRobot, of course, that little robot vacuum maker. The readout for iRobot is clear. You just take a look at the stock. It's plunging right now. What could this possibly mean for Amazon, though?
I mean, for Amazon, I don't think it makes such a big difference, given this was being reviewed for almost 18 months and the termination fee is like $94 million. So not that big of a deal when you compare it to the Adobe's termination fee of their Figma acquisition. But look, what it signals is, there aren't many buyers out there when you think about, all these companies that are valued over $1 billion. Who is left to buy them? Ultimately, it's the large tech companies that have the balance sheet and the capital allocation to make those acquisitions. And right now, the environment is such that regulators don't want any of these deals to go through. So it kind of sets the startup ecosystem back in terms of their exit strategy.
All right, Mandeep, it's great to see you. Good luck this week. That is Mandeep Singh, of course, of Bloomberg Intelligence.